Hello, welcome to this market strategy hub. In this episode, I'll be explaining what is long strangle and how to build this strangle in Opstra in a simplified step-by-step manner so that even a new trader, a beginner can understand. So this is Opstra strategy builder. Let me first explain what is long strangle. A long strangle is an option strategy where a trader buy call option above market strike price and buy put option below market current price. So let me create this one. Let's try here. This is future. Let's choose option. Let's choose this 30 March expiry and see market is going on at 23,134. So we will use 400 gaps. So here we will choose call option higher than current market price. So 23,500. One lot and one buy. Put option that is below current market price, that is 20,000. Let's choose 700. Add. So something is wrong here. This should be PE, not CE. This is PE 15. Now we have created a long strangle. So market is at 23,134.65. So in order to create this strategy, one buy 23,500 call, that is above current market price, and one buy 20,700 PE, that is below current market price. So I have chosen this strike price to show, and right now see the premium is 191.95 and 204.50. Same expiry, that is 30 March, and the probability of profit is 40.7%. Max profit is undefined. Why it is undefined? It means profit is unlimited in this strategy. So max loss is 25,746, that is 100%. So this is the premium you paid. This is the premium you paid. So and this is break evens. Break evens come to 20,304, and on the lower leg and on the upper leg that is 23,896. And this is the margin required to build these strategies. This is 25,746. So let me take you to this payoff chart. This is the payoff chart. This red shaded area, that is below 23,896 and 22,204. A trader will incur loss, will be in loss if during the trading days before expiry market trade within this zone, and at expiry market close within this zone. A trader will incur loss. So how much a trader will incur loss? A trader will lose 25,746. That is the premium he paid. And when he will be in profit? He will be in profit when market trade above this level, I mean below this level, that is 22,304. And an expiry, if market close below this level, a trader will be in profit and his profit will increase. If market falls further, so the more market falls, the more money a trader will make. So the profit is unlimited. So like lower side, the upper side too, if market close at expiry above this level, that is 23,896, a trader will be in profit. The more it goes up and close, the more a trader will make money. See, at 47,758 market level, a trader will make profit around 58,522. That's the logic here. Okay, I've chosen this strike price, that is 400 gaps, but let's increase this to 800 pips above and below market price. So instead of 23,500, let's go to 23,900. Go to modified, and instead of 22,700, let's go to 22,300. And go to modify. Let's see how the overall position will look like if we go 800 bits. See, this is 800 bits away from market price. 23,900 gold is at 80.35 rupees and 22,300 PE is at 122.7 rupees. Both same expiry, one lot size 8, and the probability of profit here is 29.63, whereas in previous strike it was only it is around 40.7, and max profit is undefined, is same as before. Make loss same as before, 100%. There too is 100%. Break evens here is 22,097, and on the upper side is 24,103. Break evens is around 2,000 point, whereas in previous strike it is around 1,500. It was around 1,500, sorry. And margin here is 13,198, whereas previous strike it was 25,700. So see, margin has come down to 13,000 compared to previous one, and probability of profit to come down to 29%, whereas in previous it was 40. But the break even break even. In previous strike it was around 1500. Now break even comes to 2000 point. So in order to make profit, market have to make a big move around 800 point upper side and 800 points lower side. This is the logic behind this strategy. So when to use this strategy, use this long strangle when volatility is low before big event, when you expect market to break out and when trend is uncertain. So use this strategy if you have no idea about market direction but sure about big movement. Lastly, remember, no movement, this strategy is a loss, and big movement, this strategy is a big profit. So I hope you like my video, and thank you for watching.